Welcome. In this video, I'm analyzing three companies: DLF, Godrej Properties, and NBCC. The price is on the chart. DLF has seen a quarterly sales drop YOY of 39%. Godrej Properties has seen a growth in its sales from its previous year's quarter by 12%, and NBCC has seen a fall of around 20%. In terms of profit growth rate YOY, DLF has seen an 18.9% drop in its profits. Godrej Property has seen a 9.2% sales. So earlier chart we saw the sales also had gone up as well as the profit has gone up. And NBCC has seen a very high drop in its profit from its previous quarter of previous year by 40%. In terms of sales growth from the recent 12 months to the 2019 sales value, DLF has seen a fall of 17% in its recent 12 months sales. Godrej Properties also has seen a 17.2% drop in its recent 12 months sales figure, and NBCC has seen a 13.3% sales. So almost all of these companies' sales in the recent 12 months has fallen below the 2019 values. In terms of profit growth rate over 2019 year, DLF has seen a 13.95% drop in its recent 12 months profit. Godrej Properties had seen a drop in sales, but in terms of profit it has grown by 50% from 2019 value. So in the recent 12 months it has seen a profit increase of 323 crores compared to 2019 value of 214 crores. NBCC has seen a highest fall in its recent 12 months profit by 62% over 2019 values. Let us see how much of the net profit actually got converted into cash from operating activities in 2019. We want the cash from operations to be more than the net profit of 2019. So DLF has seen a 163% higher cash coming in against the net profit of 2019. Godrej Properties has seen a 2.2 times more cash coming in against the profits. So almost all of these companies, if we look, cash inflows are there from operating activities against the net profit declared last year, or that is in 2019. So all these numbers are good. So this gives confidence that whatever profits the companies are showing, they are actually getting converted into cash. Highest fall in terms of where the price was highest in 52 weeks, NBCC has seen a fall of almost 60% from its 52 weeks high, that is in last 1 year. What was the highest price this script had reached, and from there how much it has fallen. DLF has seen a drop of around 20%, and Godrej Property has seen the least fall of just 7.24%. So this gives confidence in Godrej Properties that something is right, because of which the prices have not fallen that much compared to the other two companies. All of these companies are trading at high price earning. DLF is quoting at 49 times, higher than its averages of both 3 years and last 5 years. Even Godrej Properties is trading at a huge premium of 86 times its earnings compared to the 40 times on average basis. NBCC is quoting slightly below its long-term price earning averages. Current price earning is at 34.9 times, though expensive compared to the benchmark that I have set for myself of 25 times. In terms of where the price is compared to the operating cash flow or the amount of cash coming in through operations in 2019, so we are using both the price to earnings and price to cash ratio to understand valuation wise how far away the price is compared to these two variables, earnings and cash. DLF is quoting at around 25 times higher than its cash earnings of 2019. Godrej Properties is trading at a huge premium of 58 times its cash earnings, and NBCC is available at the lowest cash to price to cash earnings multiple of 7.7 times. Next, let us look at the price to book ratio. DLF is quoting at 1.5 times its book value or the net worth. So basically what we are trying to understand is, this is the value as per the company this is the actual value of the company as per its books, whereas the markets have given it a premium to its book. Godrej Properties is trading at 6 times its net worth. So this has got the highest price to book multiple. My benchmark or cutoff is 2.5 times. Until and unless the company is very good, we can increase it a little bit, but anything about 2.5 times is a high premium to pay for any company. Of course, it is relative, or it depends on individual to individual investors where or how comfortable they are in paying a certain multiple against the different variables of the company's stocks. NBCC is quoting at 3.7 times its book value or net worth. Godrej Properties and NBCC are both expensive price to book wise, whereas DLF is quoting at a good multiple of 1.5 times. Let us look at whether this price earning that we paid for all these three companies, is it justified. So when we are paying a certain high multiple, about 25 times, we should make sure that there is a growth in profits in the last 5 years. So therefore we have a ratio PEG 5 years which calculates price earning divided by the profit growth of 5 years. So we then understand that if you are paying a certain multiple for the earnings of the company, we want the earnings to be growing at a high rate as well. So for DLF we are paying 49 times the earnings, and that earnings over a period of last 5 years was growing at around 20%. So that's a PEG of 2.5. We should buy when the PEG is below 1.5 and more than 0. Godrej Properties PEG is quite high at 7 times. Godrej Properties PEG is 7, which means that even though we're paying such a high multiple against the earnings of the company, we are not getting a very high growth rate in its profits. NBCC is also very high at 4.5 PEG. 34.9 times is the latest price earning. Compared to that, in the last 5 years the profits were growing at just 7.7%. Now let us look at the profit growth rate of 3 years and compare it with the latest price earning. So in the recent 3 years we see that DLF has managed to grow its profit at a phenomenal 55%. So anything above 20% of growth rate needs to be rechecked individually by comparing the individual values of the profits and sales, because such a high growth rate is not possible when we look at other two companies. So we need to verify individually why the profits in the recent 3 years has jumped up so much. So DLF, although we are paying 49 times, you're getting a 55% growth rate in that earning in the recent 3 years. So therefore the PEG falls below 1. Godrej Properties, again a very high price earning multiple and a low profit growth rate of 10.5%. Although this is a good value compared to the price earning that you are paying, this is very low. Even NBCC's price earning multiple and the profit growth rate are having quite a big difference, therefore a PEG of 3.9. Now let us look at both the profit growth rate of 5 years and profit growth rate in the last 3 years. So we saw that DLF was growing at around 20% in the last 5 years, which increased to 55% in the recent 3 years. So profits have increased quite fast. Godrej Properties has seen about 10% of growth rate in its profits over both 5 and 3 years. And NBCC has managed to increase its profit in the recent 3 years a little bit faster at the rate of 9% compared to 7.8% in the last 5 years. So both DLF and Godrej Properties have double-digit profit growth rate, and NBCC has just managed to come nearby to 9% in the last 3 years. In terms of sales growth, DLF has seen a very mild sales growth of 0.2% since last 5 years, and in the recent 3 years has seen a degrowth in its sales by 5.5%. Compared to the profit, though profits are growing, the sales are not growing. So this indicates a kind of a red flag and needs to be investigated as to, even though the sales are dropping, how is the profits increasing. Godrej Properties is growing its sales in the last 5 years at 19%, and in the recent 3 years it has dropped to 9.9%. NBCC has managed a high growth of 19.6 or 19.5% on an average basis for both 5 and 3 years. Compared to that, its profits are not growing at that high rate. Return on equity should be above 15% for all the companies, or whatever the average of the peer group companies are. DLF's ROE values are very low. Even on the average basis from last 5 years indicated in blue, the return on equity is just 2.1%. So this needs to be again investigated as to what is causing pressure on the profits when compared to the equity holding of the company. In 2019, the return on equity was just 3.7%. Compared to that, we look at Godrej Properties, where the latest ROE is 11.6% compared to its average of 7.7% in the last 5 years. So this has managed to go above its averages of 5 years. So this gives confidence. NBCC has a stable ROE percentage of 21%, a very high growth rate, or rather a very high generation of profits on the shareholders' money for all the 5 years, 3 years as well as in 2019. In terms of profits or EBIT being generated on the capital employed, DLF has managed around 5.1% in 2019 compared to 6.2% on average basis since last 5 years. Even Godrej Properties has seen a 9.6% ROCE compared to 5.6% on an average basis. Only NBCC has shown a very high generation of profits on the total sources of funds of around 32%. Even since last 5 and 3 years, its ROCE values are excellent. Let us look at return on assets and what is the average, and then compare that. DLF was generating around 2.3% on its total assets compared to 1.1% on an average basis since last 5 years. Godrej Properties is managing 3.9% and above its average. NBCC is 18.3% of ROA compared to the average of 19.5% in the last 5 years. Next, let us look at asset turnover. This ratio measures the amount of sales that has taken place in 2019 against the total assets of the company. So the higher it is, the better. It means the company is doing more sales against the asset it owns. DLF's total sales was just 20% of the asset it owns. So this shows inefficiency. Godrej Properties managed to generate sales of almost half of its assets it owned, whereas NBCC's sales was almost 6.6 times more than its total assets. So both Godrej and NBCC have done well. Next, let us look at the inventory turnover and compare that with its 3 years average turnover. This ratio measures what is the sales against the inventory holding of the company in its balance sheet. Like asset turnover, inventory turnover helps us understand how efficiently the management is converting its assets and inventory into sales. We want the turnover ratio to be as high as possible. DLF's turnover ratio of inventory was very low, meaning its inventory holding was very high compared to the sales it did in 2019. And even if you look at the last 3 years average, its inventory holding is very high. Any inventory is a risk to the company if it keeps holding on for a long period of time. Godrej Properties has managed to convert its inventory into sales at almost the same thing. So its sales and its inventory holding was almost equal. Whereas on an average basis of last 3 years, Godrej Properties inventory holding was, or rather the sales was at 0.4 times its inventory. NBCC again has managed a high turnover of inventory into sales at 5.7 times in 2019, and also on the average basis it was generating around 5 times sales compared to the inventory holding. Next, let us look at how the company has managed to convert its profit over the period of last 5 years into cash. So we are trying to understand whether the company has received cash in the last 5 years against the profit declared by it in the last 5 years. So we want more cash to be coming in against the profit declared. So DLF has managed to generate around 218% more cash than the profit declared. So this is a good value. So we want the cash flows to be coming into the business on a regular basis. So Godrej Properties has received less cash than the profit declared over the last 5 years. Although it is very nearby, we want the cash inflows to be more than the profits. NBCC has received around 126% more cash than the profit declared. So these are all good values over the long term period. In this ratio, we'll look at how much cash the company has earned over the last 5 years, and out of that cash, how much it is used in investing activity like buying and selling assets. So in this chart, we'll look at cash flow from operations and compare that with the amount of free cash flow the company has left over. So this will help us understand how much company has invested in buying assets or fixed assets and how much it has left with it for distribution in the financing activity. DLF has spent almost 46% of its cash in buying assets over a period of 5 years. So the total cash earned was 6,400 crores and 46% of that was utilized in buying assets, and 3,488 crores was left over as free cash to be used in the financing activity. So I don't want the companies to spend more than 50% of their cash generated through operating activity into buying of assets until and unless there is a high growth in the company. Godrej Properties has also managed to invest only 43% of its cash holding into buying assets, and NBCC has invested the least amount in buying assets over a period of last 5 years. So whatever cash it had earned in last 5 years, it still has that with it as free cash, which can always be utilized in buying or doing acquisition or buying assets in the future. Next, let us compare the latest 12 months profit with its last 5 years average profit. So to understand how the company is doing in the recent 12 months when compared to the 5 years average. DLF has managed to generate 83% higher profit in the recent 12 months compared to its last 5 years average profit after tax value. Godrej Properties has also managed to generate 133% more profit in the recent 12 months, and NBCC's current profit of the 12 months has fallen below its average of the last 5 years by 59%. So there's a high drop in the recent 12 months. Next, let us look at debt to equity ratio and the interest coverage. Debt to equity ratio should be below 1 and coverage should be above 4 times. The debt to equity ratio means how much the company has borrowed money against the equity shareholders contribution, and interest coverage measures what is the EBIT against the total capital employed by the business. DLF is almost a debt-free company. Its debt is only 20% of the equity. Godrej Properties debt to equity is high at 0.8 times, and NBCC is a debt-free company. Therefore, its interest coverage is also the highest because its interest outgo or finance cost is very low when we compare it against the earnings before interest and tax. Godrej Properties interest coverage has fallen below 3.4 times, whereas DLF, even though its debt to equity is very low, its coverage is also very low, which is a sign of a red flag which needs to be investigated as to why the coverage is so low even though debt to equity is low. Next, we'll compare the amount of contingent liability the company has against its net worth. These are the liabilities that may or may not arise in the future, and these are hidden liabilities, meaning these are not shown in the balance sheet and declared separately as a notes to the accounts. We don't want the contingent liability to exceed 20% of the net worth. DLF's contingent liability as a percentage of net worth is at 36%. Its contingent liability is 13,000 crores against its net worth of 36,000 crores. Godrej Properties contingent liability is very low at 9%, which shows that the company does not have much of a hidden liability when compared to its net worth. NBCC's contingent liability exceeds its net worth by 191%, which is a sign of a red flag for me because I don't want very high contingent liability or hidden liability when compared with its net worth. All the promoter shareholding is very high and above 50%, and none of the promoters have pledged any of their shares, which is a good sign overall. Next, let us look at the debtors to sales percentage. This is the amount of payment the company has to collect from its customers against the current year sales. So this ratio is very important to understand what is the overall position of the company in terms of collecting payment from its customers. It shows efficiency of the company's management in collecting payment from its customers. We don't want the debtors to exceed 30% of the current year sales or the latest sales year. DLF's debtors to sales percentage is low at 10.8. Godrej Properties is at 20% and NBCC is at 26.3%. So all of these companies are below the benchmark of 30% of the sales. In terms of collecting payment from the customers, both DLF and Godrej Properties are very efficient. They're just taking 36 and 21 days to collect payment from its customers, whereas NBCC not only has a high amount of payment to be collected from its customers, but it's taking around 90 days, which is the cutoff for me in terms of giving the credit, giving customers the time to pay back to the company. NBCC has the lowest NPM of the three companies in 2019 at 3.8%. DLF's NPM is the highest at 15.8%, whereas Godrej Properties NPM is at 9%. In terms of paying the dividend at the current share price, NBCC is paying around 2.4%. Godrej Properties has not paid dividend last year. DLF dividend yield is less than 1%. At current price, NBCC is paying the highest dividend yield. So this concludes the basic analysis of these three companies. Let us give it score and then finalize which of these three companies have scored highest in these few ratios that we looked at. So after giving scores, we see that NBCC has scored the highest at 75 points out of 120. Godrej Properties has scored 72 out of 120 and DLF has scored 60 out of 120. Let us look at the negatives or red flags in all of these companies. NBCC's quarterly sales has fallen by 20%, whereas DLF's has fallen by 39%. The profits for both NBCC has fallen by 40% and DLF has fallen by 18%. NBCC has seen the highest fall of around 60% from where it was 52 weeks back or 52 weeks high. In terms of price to earnings, valuation wise, Godrej Property is very expensive for both 5 years PE and 3 years PE as well as the latest price earning. So valuation wise it is very expensive. The markets think that Godrej Properties is a very good company as such. DLF has seen a degrowth of around 5.54% since last 3 years. We also see a degrowth in sales over 2019 to the latest 12 months. We see a degrowth in all the three companies by less than 20%. Even profit has seen a degrowth for both DLF and NBCC over 2019. So this concludes my analysis of DLF, Godrej Properties and NBCC. Let us look at the technical chart and understand where these companies are in terms of relative strength index or RSI. This is the chart of DLF weekly chart. We can see that relative strength index as of 28th February 2020 is at 46.6. So I would wait for the RSI to fall at least below 30 before I can start my buying. So it is quite high for DLF right now. Let us check out Godrej Properties. Godrej Properties current price is around 1003 rupees and its RSI is at 51. So this is also very high. Either we buy below 35 or below 30. You can see here in October 2018 the company's RSI had fallen below 30. The price was 504 rupees. This was the time that we can buy into the company. We also need to wait for the valuations to come to our benchmark rather than chase the stock. Finally, let us look at NBCC. The current RSI is at 31, very nearing to 30, and the previous RSI had also fallen below 30. So this was the time to buy provided the valuation fundamentally also is low. We cannot just depend on relative strength index to time our entry. We also have to look at valuation, where the price to book is, where the price to cash, price to earnings, These valuation ratios help us understand, along with the technical chart, when to start buying into companies. That's very important. So this concludes my analysis of all these three companies. Thank you for watching this video.